Hi, Craig Sullivan with Sullivan Financial Partners. Today we're going to talk about an important one. The election's over. Now what? First and foremost, the most important thing I want you to focus on is staying focused. You see, some people right now are a little disheartened. Some are really happy. But at the end of the day, no matter what side of the aisle you fall on, no matter how you feel about the results of this election last week, the important thing you've got to focus on is maintaining your momentum, maintaining your focus, and more importantly, maintaining your plan. Let's take a look at a couple of things. This chart talks about how the 6 months following elections typically lean more towards value investing rather than growth investing. Now, we don't need to get too into the weeds on this. Just know that there's potentially some changes to investment strategies, philosophies, etc. during these periods of time as we look through historical performances. Now, that doesn't mean you need to go out and change everything. It doesn't mean you need to worry about a thing. The main purpose is just for understanding that no matter whether you were in growth or value, the 6 months following presidential elections have tended to do pretty well. So you'll see the growth over here averaging a little over 3%, and then in the value side, a little over 6.5%. Things are looking okay. The next piece we're going to talk about is the GDP and what that means. Following periods of really big spending and high inflationary times where we're setting records, we believe that one major focus of the upcoming Trump administration will be to shrink the size of government spending. Historically, like in the late 70s and early 80s, we've seen that times of shrinking government spending have led to pretty good, robust growth times in the economy. So again, something to focus on, nothing to make big changes for. It's just important information to keep in mind. This one is going to be the most revealing, the most fun. What you're going to see here is different examples of if we only wanted to invest our money when our current or favorite or preferred party was in office, and then sit in cash when the opposite was true, and vice versa. So let's take a look. The red line down here shows what if we had put $10,000 in the stock market starting in 1949 and we only had it invested when there was a Republican president in place. Meaning when there was a Democrat president in place, we were on the sidelines sitting in cash because, well, we just didn't want to be involved when the party didn't go our way. In that scenario, this red line ends a little over $80,000. Your $10,000 only grows to $80,000 over that time period. Conversely, if we say we only want to invest our $10,000 when there's a Democrat president in place, and we're going to sit in cash when there's a Republican president in place, what we see is it has better growth. In fact, it ends up at $450,000. That's quite a bit difference. But here's the more important thing. If we throw politics to the side and we focus on having a good developed financial plan, if all we do is say we put that $10,000 in and we leave it in no matter what's happening, I don't care who's in office, I don't care what party we like, do you know that that same value would have grown to over $3.8 million? It's pretty revealing. The more important factor here that I want everybody to focus on is having a plan. It's important to us personally, whatever happens on your side of the aisle when it comes to politics. But what you got to focus on when it comes to your retirement is having a plan and making sure you stick to it. If you need help developing your financial plan, let us help you walk through your confident retirement journey. We'll make sure everything goes well. Take care.